What's up, guys? Welcome to the Mississippi Real Estate Podcast, hosted by Ryan Watson.
And I'm Tripp Spruill, where it's all about real life, real talk, and real estate.
Join us as we dive into the stories, trends, and insider tips shaping the world of Mississippi real estate.
Whether you're buying, selling, investing, or you're just curious about the market, we've got all the insights you need to navigate with confidence. So if y'all are ready, let's get real.
All right, welcome back, guys, to another episode, and we are so excited to have Julene Stewart and April Hurley with us today. They are mortgage brokers with MS Lending, and we're so excited to have y'all today.
Thank you for having
Thank you for being here.
Thank you.
And
Happy Tuesday.
yeah, happy Tuesday.
First of the month.
Yeah. Oh, yeah. It's April Fools.
Oh my goodness.
Don't trust
Well, the podcast-
anybody today but your mortgage
That's
broker.
right. Yeah, there you go. Well, podcast over. No, I'm kidding.
We should have had a good.
Golly, I didn't
little,
even think about April
I didn't
Fools.
think
I
about
don't
it.
either.
Look,
Yep.
to be honest, we're going to get into the real talk part of this podcast.
Yes.
I woke up on the wrong side of the bed this morning, forgetting everything, and I really just wanted to redo. But so hopefully I won't butcher this one up too bad.
No,
Because
you're gonna be just fine.
I've started out on the wrong side of the bed this morning. Couldn't get out of the wrong side of the bed.
So let's talk about this real quick. Y'all been in the industry for 20 years, over 20 years.
Mm-hmm.
I started
Wow.
in 95,
Oh my goodness.
but been on the mortgage side for about 8.5 years.
Mm-hmm.
So
I started in 2002 and I've been on the mortgage side since 2006.
wow. Okay, fantastic. Okay, so this is the first time that we've had two interviewees.
Yep.
So we like to start out by just kind of getting, who April is and who Julene is. So we'll go April first.
Okay.
Yep.
Just give us a
Since
rundown.
it's April 1st.
Yeah. Hey, there you go. That's
That
a
was good.
That was good.
That was really good.
I got to throw
So-
in little.
April 1st, so April gets to go first.
Yay.
So just tell us a little bit about yourself, who you are, like where you grew up, how you got into it, and everything.
So I actually grew up in Panama City, Florida,
Okay.
and moved to Mississippi in 2005. I actually started in the mortgage industry in Florida. I worked for a company called Seltzer Management Group, and they were a servicing agent for Florida Housing Finance Corporation. And so I actually approved income for low-income housing families for a second mortgage.
Okay.
So that's when I kind of first started getting into the mortgage world. So when I moved here, it's kind of funny. I kind of started on the back end and worked my way up to originating. I was in escrow for a few years, and then I went into funding, and then I went into wholesale closing. So when I say wholesale, I basically close loans for all the brokers and correspondents in our area. And so a lot of them would actually come into our mortgage center. And so I got to meet a lot of them one-on-one. So that's how I met my past boss, Ryan Engel. He owned Fidelity Mortgage.
Mhm.
And it's funny because I really thought my next step was underwriting. And I know that sounds crazy.
Yeah, been there before.
Yeah.
Yeah, and so I thought, I'm going to go into underwriting, and I actually applied for a position and did not get it.
Oh, wow.
And it was, it hurt my ego really bad, but it was meant to be. So Ryan needed a processor, and I had a good friend that said, April, I think you would be a great originator. And I just thought, wow, I don't, that's kind of scary. I don't know.
Yeah.
And so as I processed, I got my license, and I absolutely love it. Originating is, out of everything I've done, it's my favorite. I do love the processing. I feel like it keeps me up to date with guidelines and things like that. So I still do a little bit of that, but originating is mostly my passion.
Yeah, that's your bread and butter now, huh?
It's my bread and butter, and it's just getting to help someone buy their first home or refinance, and every borrower is different. There's no two situations that are the same, so it's just a rewarding experience.
For sure.
Mhm.
Cool.
I want to back you up just a little bit. So you said you're from Florida?
I
You're
am.
from Florida. What brought you to Mississippi?
Oh, that's another long story.
Uh-oh.
That's a long story for another podcast.
I'm just here.
She just said we got to bring her back for
All right.
a different podcast so she can tell us.
Yeah,
Okay.
that's another whole story
Okay,
podcast.
that's fine.
But
We'll have you
no.
back then.
Yeah,
Tell that
no.
story.
And, I love it here. I didn't think I would stay here in Mississippi, and it's a great place to raise a family. I miss the beach. But my sister's in Fairhope now, so I miss the beach, but I do not miss the cost of living in Florida.
Yeah, it's a lot different. Much different. Much different.
Yeah.
No doubt.
Mm-hmm.
Well, that's amazing. That's awesome. All right, Julene, tell us who you are and
where
how
you from.
Yeah.
Where am I from? I got caught there already, didn't I?
Yeah.
I'm originally from upstate New York.
Okay.
Don't kill me.
Okay.
We moved here in 2006.
Okay.
So I started in real estate in 95. I was a senior in high school, and I was in business classes, and my teacher's dad was a local town attorney, and they were needing somebody in the afternoon. So they did primarily real estate closings and estate work. So that's how I got my first step into the world of real estate. It was my senior year of high school in 95.
Oh,
now
wow.
that I just completely dated myself. That's great.
We date ourselves all the time.
I mean, it's okay. It is what
you
it is.
date me all the time.
I do date
Don't date
you,
yourself.
yeah.
Go ahead.
That's right. I have to remind him.
Look, all a part of it. Anyway, so
And that was in New York.
New York.
Okay.
Mm-hmm. Worked my way up, got great years of experience there. I actually moved into the paralegal role. So I sat in kind of that seat for a good 20 years or so. And then have since moved over into the mortgage broker side. I got to the point where I knew everything about my job as a real estate paralegal and closing loans, and just didn't feel challenged anymore. But still loved the real estate industry and didn't want to leave it. So same thing, working with all of the lenders in town. I knew exactly where I wanted to be at that moment in time. So poor Ryan, I called him and I was like, hey, you want to give me a job? He was like, wait, what? So we chatted, and he just kind of gave me the good, the bad, the ugly, and everything about this side of the industry, and have loved it every single day since.
Yeah.
We were super excited last year to merge our companies with MS Lending.
Cool.
We love being part of just one big company now and serving in that broker capacity to the community.
Yeah, fantastic.
So
in high school, were you doing just like a bunch of admin,
so this is
copy and paper?
This is horrible again, okay? So, 95, right? We learned to type on a typewriter.
Oh, yeah.
We had a computer lab that had about 5 screens in there. So one of my senior year class electives was taking, business classes. And so basically it was
so this was
on the dark side of the computers in the, DOS era.
Yeah. Oh, wow. Wow.
That's how long ago. Yeah.
I know.
So when I first started doing the real estate paralegal side of everything, we literally were typing deeds on a typewriter.
Oh, wow.
Wow.
Yeah.
Email was just kind of coming
and look,
about.
Well, that you can't mess up.
No,
right.
If you do, you're like, golly.
You got to start. Yeah, that paper's getting trashed.
Look, the details, the dotting I's and crossing the T's got hammered into me at a very young age.
I feel like that helps you. I was just watching a video the other day, not trying to get sidetracked too much, but they were talking about typewriters and everything. And he was like, it makes you think more about before you, it's just like thinking before you speak, you think before you type. Like you got to be so intentional about everything you do.
Wasn't any grammar checks, spelling checks, or definitely no chat GPT back in the
Right.
day.
Which is amazing.
Right.
Yeah, no doubt.
AI technology.
So y'all both ended up with Ryan
Mhm.
before MS Lending
Yes.
came into, but you're saying he merged with Michelle?
Yes.
So y'all are still all
We're
together.
all still together.
Okay.
Yeah.
That's really cool.
I don't know if I knew that.
Yes.
I'll throw a little fun fact out, much like Monique last week, where she helped me and Tracy get into our primary residence, and then helped us with all of, starting into our investing journey. April was a part of our first, I think she helped us close our primary residence.
Yes.
So me and
That's
April
awesome.
have
Heck
pretty
yeah.
much,
We go way back.
we go way
That's
back,
cool.
and that was way before I was even in real estate, I guess. That was just us buying our first home. So that's the first time we met, and then we just have carried on ever since I got into the business and everything like that. So
Sent you all my insurance clients.
Yep. We have a nice little pipeline that works out pretty good. Well, we'll get to insurance later. It's definitely in the discussion today.
We actually were talking to Tripp yesterday about
life insurance.
Life insurance.
Yep.
We had. I'm telling off on myself. We don't have life insurance, so I was like,
You gotta get it.
we need
Yeah.
to
Lease
get life.
term.
You
we gotta
get
Yep.
it.
So I called Tripp. And I was like,
yes.
it's just something we hadn't done or hadn't thought about.
He's like,
we
"Do
called
we need
Tripp.
it?"
It's like, Tripp, as a friend, tell me real life here. Do I need insurance
Yes.
on myself? He was like, yes.
Yeah. I said, Do you care about your family and your kids? He's like, well, yeah. I said,
Yeah, of
then you need
course.
life
Yes.
insurance.
Life insurance and a will. Those
Yeah.
two most important.
Plug in
Yes.
Tripp for insurance.
Yeah.
Yeah.
Yeah,
Hey,
appreciate
if nothing
that.
else, cover that mortgage
Okay.
being
That's
paid
right. We're
off.
going to turn this
Yes.
this podcast just got turned
I
into
did.
an insurance
Yeah,
podcast.
Look, I
Hold
plug
it.
me in
I know,
photography
that's
all
true.
the time. So
Yes.
Well, tell us about Mississippi Lending,
MS Lending.
MS Lending. I did it.
Yeah.
Sorry, Michelle.
Sorry, Michelle.
Sorry, Michelle.
Sorry, Michelle. That was my fault.
MS Lending.
MS Lending,
Mhm.
and y'all are a brokerage.
Mhm.
There was a couple of things you said about, I guess, steps of what lenders can do, processing all that. I kind of want to get into that too, because I don't
Okay.
think people understand fully. I think they just think, hey, this is the person I went to get my loan.
Yes.
And so they may not understand. So let's talk about MS Lending real quick,
Mhm.
and y'all are a brokerage and what that is, how that differentiates y'all
Mhm.
from bank lenders or
Mhm.
whatever else, like what a broker can do.
Basically, to put it as simple as possible, and then we can dive into it a little bit more, is when you go to a bank for a mortgage, if you were to walk into Regions, that loan officer is only going to be able to show you their rates and products offered within that bank.
Mhm.
So MS Lending, we are signed up with several different lenders. So when a
Okay.
buyer comes to us, not only can we shop rates through all of our lenders, but also products.
Mhm.
So we can do a lot of products that a typical bank can't do. And today, a lot of people don't fit into that traditional mortgage. They may need a bank statement loan, or they may need something that is not that traditional mortgage that we can help with.
Yeah.
And so, I mean, just like, people shop insurance, why would you not shop your mortgage?
Yeah.
So,
Right,
That's
sure.
a great point.
Yep.
so that's basically as simple as I can put it.
I would just kind of piggyback a little
Mhm.
bit because it happened literally this morning. Got an appraisal that came in, and the type of dwelling was not what it was thought to be. And so now we are having to restructure the entire transaction, move it to a different lender who will do financing on that type of dwelling.
within our
Okay.
company.
Mhm.
Okay.
Mm.
So
Okay.
the loan is not lost. The client's not,
Mhm.
having to not get their mortgage on their
That's a
property.
huge
So.
that's a
Mhm.
huge plus right there.
Yes.
Because where if you were just at a Regions or wherever, not trying to plug Regions, but
Yeah, no, that's different.
not a bad bank.
Mhm.
But if you just went to one of these normal everyday lenders, they
Mhm.
might say, "We can't do that. I'm sorry,"
Yes.
and then the client would have to walk away or
And
customer.
it's because they do stop there, right? Like they don't
Mhm.
realize that there's other options out there for
Mhm.
them. They
Yeah.
think
Right.
they've hit a
Mhm.
brick wall and this is their this
Mhm.
is the end. They're never going to own a home, you know.
Yeah.
And as soon as you put that mindset into people, you're not coming back from
Mhm.
that.
Yeah.
Yeah.
You know, it's so hard to get people
Mhm.
past that fearful step, and they don't know it's
Mhm.
complicated. Like this
Yeah.
is complicated. People,
For sure.
it's not like any other transaction that they're going to do or purchase or financing, and you
Mhm.
can't just Google it. You can't just
Right.
AI it and get your answers.
Yeah.
You know,
Yeah,
unfortunately. So
Wish you
Yes.
could sometimes.
I know it'd
Yeah.
be great, but I
Okay.
think that's what makes us great on the broker
Mhm.
side is
Yeah.
us just being able to not only shop the different products, but be super
Mhm.
competitive as well
sure.
with our financing terms.
Mhm.
I'm not going to say the word that
Yes.
requires disclosures.
Yeah.
Yeah.
Well, and also too, as brokers, we can only make a certain amount on our loans, and so that tends to kind of help keep our rates lower most of the time.
Okay.
And we work for the consumer, not the bank.
Yeah.
So our fees are lower. We don't have all these extra
Okay.
fees that may be out there sometimes. So I think there was a study done, and don't quote me on the figure.
No, it was 03. We're waiting for 04s to come out.
Yes, but the average when a person uses a mortgage broker over another lender, they save, what was it, close to 10
It
grand?
was over 10.
Oh,
a little
wow.
over
Yes.
10,000. We
Okay.
expected to be closer to
And that's just because your ability to shop it out and find the best rate that suits their needs and,
and
stuff
it's
like that.
overhead alone, right? So,
Yeah.
I mean, if you take a bank that's
Mhm.
having overhead on 57 branches throughout the
Mhm.
state, the consumer pays for everything in the end. But at the
Yeah.
end of the day, you get a McDonald's hamburger or you get a Joe's
Mhm.
Diner hamburger. They're
Right,
you're two
right.
different things,
They're both
right?
a hamburger.
They're both a
Yeah.
hamburger, but Joe's Diner is going to leave you full.
Yeah, right.
You know,
McDonald's.
but at
you don't know what
McDonald's,
you're getting.
but you're paying for the marketing,
Yeah.
you're paying for the
Mhm.
advertising, you're paying for all that. So
Yeah.
it works the same way in the lending industry. So
Yeah.
Mhm.
that to me is the biggest benefit of why we can be just more economical for consumers.
Actually met one of the owners of Joe's Diner the other day. Actually,
See?
actually a photography client of ours.
I had brunch
I
there
was like,
Saturday.
That was.
It was great.
I was like, you own you what? It was
Joe's
awesome.
Diner's one of our favorites.
I was like,
They have a really good
I was like, hook
breakfast.
me up with a hamburger.
We do this often. We'll go down a lot of rabbit holes and we got to come back out of it. And this was one of them.
I mean,
Sarah's over there shaking her head already. Like, it's too early in the podcast for y'all to be talking about all
look,
this stuff.
that may be why people like listening to us.
Maybe so.
You never
I
know.
don't You know, that's interesting. So I'm hearing the same thing of what I tell people, speaking of back to insurance in the insurance world. You know, you have your captive agents and they work for like, you know, your Allstates and your State Farms or whatever, and they are limited to their product. Whereas as an insurance, you know, independent insurance agent and working for a brokerage, we have write-in authority through a lot of folks. So that's the similarity that I'm hearing. And I mean, I knew that, but I guess even in the real estate world, I mean, realtors, we kind of stay in our lane. We let y'all do the lending, but there's still a lot that I don't really understand about y'all's business and whatnot. So,
Sorry, I didn't mean to cut you off. I'm terrible about that.
No,
no, it's okay.
Thought pops in my head,
Do
and if
it.
it doesn't come out, it's gone.
I do that too.
I think the biggest obstacle that people have been facing lately is affordability, right? We have that conversation over and over again. But how do you not think that your loan terms don't affect your affordability, right? So if you're going to pay a 1/4 or 0.5% lower somewhere else, that's going to give you more of a home to be able to afford to purchase. So why are you not shopping?
Right.
Why are you not shopping that factor?
for sure,
You know?
absolutely.
No,
Yeah.
it just makes sense to shop.
Mm-hmm.
For sure.
Well, okay. You said it earlier about underwriting, and sometimes people have this question because they, you know, people get frustrated about, you know, well, we're just plugging all these numbers into a box and out comes this number.
Right.
And then you get people to say, or if you listen to like Dave Ramsey, he'll be like, you know, get people to manual underwriting, which is kind of lesser of a thing, I feel like. So how do you do your underwriting? Do y'all have some in-house underwriters? Because you said you almost went into underwriting.
So when I worked for Trustmark, yes, I thought I was going to go into an underwriter at Trustmark, but we do not have in-house underwriting.
Okay.
So Trustmark is actually one of the lenders we are signed up with. So
fantastic.
So if we choose to if we choose to use Trustmark to do this buyer's loan, underwriting at Trustmark will underwrite their loan.
Oh, okay.
The closer will underwrite.
So basically, who y'all put them with, they do the underwriting for their. Oh, okay.
UWM.
Yep.
They do. We have underwriters with UWM, EPM. So all of our lenders, if we stick with that lender for you, that's who's underwriting your loan, that's who's closing your loan, and that's who's servicing your loan.
There has to be that degree of separation, so the underwriter can't be the originator.
Okay.
Well, why don't you go into it then on the lending, like pecking order or the ladder, career ladders per se. So because you said
we could get
because
deep.
we got your originators, so and you talked about processors and underwriters. So explain quick. Well, it doesn't have to be too quickly, but like in more of like keeping it simple,
Surface
kind
level.
of
Like the timeline of where it goes.
Like when you start, if you want to start in the lending world, where do you typically start out as?
That's
way bottom.
Yeah.
So what is way bottom? Because y'all are originators now, right?
Yes.
So you're kind of the top. You've had licenses now.
Yes.
You've got
Yes.
So what? How does that?
Well, and I want to touch base on that too.
Career ladder, this thing.
As mortgage brokers, we have to do continuing education to keep our license.
Okay.
Yeah.
So when you have an originator through a bank, they're licensed under the bank. We have to do 8 hours a year to keep our license, which I'm proud of.
For sure.
It keeps us
sure.
educated with all the rules and
Up to date
regulations.
and stuff.
Yeah.
So yeah, we work hard for our license and to keep it. I would say,
as far as all the different positions, I think what most people don't realize is there's probably at least 20 people touching your file from a real estate transaction end. And it depends on each lender and how they're set up. Okay.
Sure.
So a more bigger lender that we work with, a lot of their stuff is truly automated. You push a button, it runs the data, it's AI running it. You go somewhere smaller and there's literally someone who's going to pull the flood cert. That's where they're going into FEMA and seeing if the property's in a flood zone. You know, you got someone who's running the fraud guard report. So everyone's name who's involved in a real estate transaction gets ran against
LDP, GSA.
Yeah, it's the government's, you know, like
all the government
don't do
rules.
business with. That's I can't think of the name of the list. Anyways, so there's a person who has to sit
It's an
there,
acronym. It's one of those acronyms.
But run the 30 parties to the transaction through that, right? So those are just two little things that are one small piece in the huge chain.
There's tons.
I can't even like get into the weeds with all of it. Like
Well,
verification of employment, checking your verification of employment all the way up to the day of closing. There are people ordering your title work, your appraisal, your insurance. There's you know, there's so many different pieces.
I
that
think
go
the reason
into
I
it.
ask is because a lot of people just assume like this is the person and this is just my lender, and there's a lot of busy bees behind the scenes
There's
of
a
that
ton,
too.
you know. So when closing gets down to the wire and people are like,
Yeah.
"What are you doing?" Well, it's not me. It's the 13
Yes.
people behind me
Right.
that
Yes.
have to do
Yeah.
their job in order to get you to the closing table.
Yeah.
You know, that's the hard part for people to
What do you mean you
understand.
can't close one in 2 weeks?
I mean, we can.
I know.
We have.
I think you did. We had one. It was like it was probably
It was
a record time.
well, I
closing.
think because we had an appraisal waiver, so we didn't have to have an
Yes.
appraisal.
That's true.
Home
That usually
inspection was
helps.
done. If the home inspection is done quick,
Yeah.
it speeds things up on our end.
Well,
Yeah.
you're
So-
welcome for the home inspection.
Thank you. I really did appreciate that.
No, that was crazy, but it is funny because I mean, if you get conventional or any of this lending, and people are like, yeah, can we close and under 30 days? It's like, oh, you always get that's
We
going to
always
be
say
tough.
we're going to do the best we can do.
Yeah.
Well, and it's normally if it takes a week for the home inspection, it takes a week for the appraisal.
Appraisal.
That's 2 weeks right there.
Yeah.
Then we
Yeah.
can start doing our job.
Yeah.
You know,
Yeah.
so it's kind of like we're 2.5 weeks in before anything starts. I want to circle back to the underwriting thing if we
Do
can,
it.
if you don't
Yes,
mind.
Absolutely.
Because I think
Absolutely. This is
it's
good
it's
information.
the infamous underwriters, right? Like
Yeah.
that's what everyone is. Who's an underwriter? What does that person do? So in the mortgage world, and you brought up a manual underwrite as opposed to, and you left it hanging off, right?
My bad.
I'm
No,
glad
you're
you're
good.
I'm glad you're coming
No,
back.
I
to
want
this.
to because I think
Yes,
it's a
no.
huge thing that a lot of people don't understand. So every single lender takes the same data on a loan application. So people fill out their loan application with verbal information, right? Nothing has been verified yet. And then we pull their credit. All of that data gets electronically downloaded securely into an AI ran software program called Automated Underwriting. And that AUS system will give us findings. So if the findings come back with an approved eligible, that means that based on the verbal information that you've given us and this credit, we think they would get this type of loan.
Mm-hmm.
Okay.
cool.
Now it doesn't say like, hey, yeah, you're approved for $150,000.
Yeah.
Yay, move on. No, the findings report is 7 pages long. It's
Mhm.
basically a big old subject to, all these things playing out is the loan would be approved. So then that's what we issue our pre-qualification letters on. Okay. It's basically just running that data through that system. So now you go make an offer on a house, you get under contract. Now we start getting all of your supporting documents in, your pay stubs, your bank statements, your W-2s, your tax returns.
Your
and
dry blood
people-
specimen.
Yeah, I was about to say your blood type.
People are never not trying to tell you all their information. They
Yeah.
don't know what information to give you.
Yes.
And so until you get all of that, you're kind of just based on the data you have at the time, right?
Right.
So home inspection's done, everything's great. We do an appraisal. Appraisal's done for the bank, not the consumer. Everyone
Yes.
kind of gets confused in
Yeah,
that.
I do think people do get confused
They
on that.
do.
That's a good thing to iron out.
Yeah.
That is for the banks.
It is for the bank. The bank is
Yeah.
approving the buyer
Mhm.
and they're approving the property.
Yes.
And so that's what that data pulls from. So then we get title work in from the title insurance company. You need to make sure you're actually getting good title to your property. That
Yep.
could kill
Yeah.
a transaction.
Yes.
Yep.
Mhm.
So now once we have all of your supporting documents, your appraisal, your title work, your insurance, all of that physical confirmed data and paperwork now goes to a human being underwriter.
Human being.
That person then
Which
can say
they usually get a bad rap.
they do.
Yeah, because
They
they're like,
do.
oh man,
they
we gotta,
do.
it's
Y'all,
gotta go to the underwriter. That's gonna take forever.
That's the
and we're
easy
gonna-
person to blame.
They have so
Yeah.
many guidelines they have to follow. They are amazing. They really are.
Which I'm sure, yeah, they're necessary.
Their hands
They-
are full.
Well,
So-
they can do what the computers can't do, right? They can read in between some of the lines
Yeah.
and say,
Right.
okay.
I
you
mean,
know,
ultimately,
Good
they
or bad.
have the
Yeah.
power.
Yeah, yeah.
They have the power to deny or approve this loan.
Yes.
yeah.
So we've got to work well with them. We've got to make sure we're getting everything to them. And I'm glad I did not become an underwriter.
Yeah. I can't imagine. They do try to make the loans work.
Yes,
Yeah.
But
they do.
essentially,
No offense to any underwriters.
No,
No,
we love
I
our
love
underwriters.
underwriters.
We
Yeah.
love them.
I mean, absolutely. The difference between a manual underwrite is
Mhm.
basically when we run that data through that software program,
Mhm.
it doesn't come back with an approved eligible.
Mm.
Yeah.
So that underwriter is taking on all of the risk,
Mhm.
basically, and approving that loan.
I got you.
It's kind of like the automated programs, like that little rubber stamp of approval on the end. Like the underwriter's good, and then when it runs through the automated program, then we're good again. And what people don't realize is we run that automated program all the way up until the end.
several times.
Yeah.
If a penny changes on your bank statement, it could change your findings.
Insurance coming in higher.
Yeah.
Gotta rerun it.
I'm gonna get killed this episode about insurance. Well, that's why y'all tell people, like, in the middle of when you're doing the processing or preparing for them to close, is like, don't go buy a vehicle or don't go throw stuff on credit cards.
And a little thing can take an approval to a disapproval. I mean, it's not hard for that to get switched. And I think people don't understand and realize that, like, it can go all the way to the end, and that data changes, and it changes the entire structure of the loan and the transaction. So
I'm going to circle back.
Sure.
So we were joking about time frame of close. What do y'all typically like a realtor to come in when you see the paperwork? Like, when do y'all really want? Like, what's a good bit? I usually try to do 45 days.
It depends on the loan for sure. Our down payment assistance programs that we do through Mississippi Home Corporation, we really do ask for 45 days because it's going to two separate. It's going to Trustmark and Home Corp. You're dealing with two separate underwriters. So we just ask, that they, 45 days is great.
Yeah.
Typically, we do close them before 45 days, but on those 45 days, but typically 30 days.
Your more rural properties, it's harder to get an appraisal. Like, there's sometimes it takes 2 weeks for us to get an appraisal, and it's not anything we can control.
It's just probably hard to run comparables on.
Yeah, they just don't want it. Why would you drive 40 miles when you can do 3 appraisals in 10 miles? You know what I mean? So I get it. It's business.
Yeah.
And there's just not that we don't have that many appraisers in our state, so there's a multitude of factors that go into there. Like a 2 or 3K loan, you better give me at least 2 months. There's no way I'm closing any sooner on a 2 or 3K, which is a rehab loan. For anyone who doesn't know that, but a standard regular conventional loan, easily 30 days or less. No problem.
Yeah, that's what I always
45 is a safe.
I do 45, and I just remind people, because some folks are like, well, they can close earlier than that. But, like, it says in our contracts, on or before.
Yes.
You know what I mean? So, like, we can always do an addendum and move it up.
And think about time of year, too, right? Like, if it's November, volume's typically down in November, and people are trying to move over the holidays, so you can get through the process faster. But you try to move over the summer months, and there's 10 million loans that are trying to get originated nationwide.
Yeah. For sure.
It's just going to take a little bit longer.
Yeah. So the benefits, benefits of brokerage versus like bank is they can shop it out. They can save you some money. It's kind of like what we said in our last episode, where we have one person kind of not agree with us about the reasons why to use a realtor. Real estate agents typically bring you more money for your house.
Absolutely.
And brokers can help you save some money on your lending.
Absolutely. We say our superpower is choice.
Yeah.
So people just remember that our superpower is choice. You're going to have so many more options with us.
Yeah.
Loan rate, less fees. I mean, it's just
good little tagline.
I can't say brokers in general, but I can say for us and our group of wonderful people at MS Lending is we don't work 9 to 5. We're answering our phone on nights and weekends. We're around and available when the consumer needs us.
There's nothing more painful than a lender that just won't answer the phone.
Yeah.
When you're under contract.
A lot.
Our business is all about communication. So that's just that's really anybody in the deal that touches the deal as it's active and try to get it closing. Like, it's frustrating when you can't get anybody on the phone. Or a text, hey, I'm in a meeting, I'll call you right back or something.
Sometimes you're trying to get contracts signed at 10 o'clock at night. And you're like, I got questions, but we got a deadline here. We got to get this signed like now. And you need to talk to somebody.
That's right.
Well, and most people do work at night now, if you think about it. Even our clients, they need to talk at night or in the morning on the way to work or on the weekend.
And we don't want. And I'll say this: we don't want to be working at 10 o'clock, but sometimes that just happens. And
boundaries, people. Boundaries.
Boundaries.
My phone goes to sleep now at 8:30. So if you don't get me before 8:30, it can wait till the morning.
Yeah.
Let's talk about some of the hurdles in the market. So April and I were kind of just talking, and I didn't realize that. Let's just talk about it. We'll let you guys get into it. So what are y'all currently seeing? I know me and you mentioned student loans. And why don't you get into student loans and we'll move on to the others that y'all have been seeing.
So student loans, back during COVID, everyone knows if you had a student loan, it went into deferment. No one had to pay on their student loans during COVID. So back in October, correct? September, they announced that that was going away. Everyone had to start paying on their student loans again.
Surprise!
And so depending on who your student loan servicing was with, Nelnet, a private company, they should have started emailing, reminding you like, hey, your payments are gonna start back. Get on a new payment plan, or it's gonna be this.
They gave you a whole year, so
Yeah,
you had
yeah, I mean, they did.
more to
They-
get your stuff together.
They gave you a whole year.
They weren't lying when they said you're going to have to repay
Yes,
this thing.
they were
Yeah.
not lying. So unfortunately, what we're seeing now is, we may have pre-approved someone months ago, did a soft pull on their credit, everything's great score, no lates. And then now they're finding homes and we're pulling the hard pull, and there are student loan being reported 90 days late.
Kinda hurt.
And unfortunately, not only does it drag your score way down, it will not run through our AUS. Like she said, we won't get an approved eligible. So it's really affecting a lot of people right now.
Yeah.
So if you have student loans, please reach out, make sure you are current. And I think Michelle said last week, and I did not know this, they can't report it late till 90 days.
That's insane. That's a lot.
So
now you have 3 months,
Yes.
90 days late. That
And that looks worse than a 30-day late or a
That's
60-day
insane.
late. So
That's insane.
please,
that's how you go from an 800 credit score to a
Yes.
600 credit
And
score.
I think that
overnight.
happened to one of your clients.
Was
So-
that a first-time home buyer?
No.
Or was it somebody that, somebody
not.
just was like maybe...
Think about it. Like if you're in college and you
Yeah.
get out, you probably used your college email address, right? And so
Yeah.
now you've moved. So your mailing address has changed.
Yeah.
Your email address has changed. If you didn't stay up to date on updating your information, which we're all human, no blame there. We all don't.
Right.
It's out of sight, out of mind, right? So a lot of people just kind of fell into this where there was no way that they were contacted and they just did not know. And if you don't think about it, you don't think about it. So we
out
just
of sight, out of mind.
Yeah.
I thought they were going to be forgiven.
Yeah. We have gotten that too, where they
we've
thought it
gotten
was
that
totally
too.
forgiven.
We've gotten that too.
Such a
But
small
it's-
portion that was actually forgiven. Most of these folks are
Yeah.
having to repay them.
They're
Well,
gonna-
you're
they're
seeing
gonna
a
get their
headline,
money.
right? You're
Yeah.
seeing a headline and not reading the full article.
Mhm.
You know that
Yeah.
like it's just being talked about. It
Yeah.
wasn't approved.
Yeah.
Stuff
But
like
it's
that.
really sad because otherwise their credit's great, but just 90 days late on student loan is not going to run through.
It's not
So
good.
it's just that's one of the biggest things we are seeing right now is that with the pre-approval process.
Or even not even the soft pull. Like if your credit report's only good for so many days. I don't know if people realize that.
Tell them
too.
how many days it's good for.
It depends on the lender.
Okay.
Usually it's 120, but sometimes it's 90. But so think about that. Your credit report is basically good for 2 months, and you have to be under contract to buy a home, so you can close within that next 90 days.
Yeah.
So if we've got someone who's really early in the process, just kind of shopping, we maybe not do that hard inquiry against them, so they don't, we don't start the time frame. We just do a soft check. So that is one reason why we will do that in place. But a lot of people have kind of fell into that too, is their credit report expired, and so we had to repull it. So you might not be pre-qualified, like she said, anymore when you once thought you were. So it's hard.
So we've been telling our agents too, our real estate agents we work with, if you have someone that was pre-approved even 2 months ago or a month ago, and they want to submit an offer, just please have them reach out and get a new pre-approval because
It may not be
may
good
be
anymore.
different now.
May not be good.
Yeah.
This goes back to basically maybe episode 2 or 3 where we talked about debt
Oh yeah.
and how, because they're sitting right here, and this is what they deal with. The debt to income ratios are important, and if you don't know that's hanging out there, and you're like, I just found my dream, whatever, first house or the next step up or whatever, and all of a sudden something that you forgot about because it went into deferment pops up. That's a killer for that kills the deal. That's over with. And that's one thing that I always harp on is like, because being in this business, there's so many. You just said it. Y'all said it earlier when we started the podcast. Affordability is a big issue right now. Prices of houses are going up. Interest rates are kind of not really going down where people thought they would. And then you got a lot of people carrying a lot of loads of debt, and that was the whole point of that. That's why I don't want to sound like I'm just beating a dead horse over this all the time, but you really need to get that debt cleared up because obviously the less people you're paying, the more you've got to go into whatever you want to do. Buy a car, buy a house, save for a vacation.
Oh, and buy the house first before you buy the car.
Yes, we see that a lot. We do. We'll see someone, they will go get a brand new car and have $1,000 car note, but then want a $1,500 mortgage payment.
And we're like,
y'all literally have them buy it in the middle of, y'all have had that?
Yeah, but maybe it's 3 months
Like
before they
right
come to
before.
us, right? They're like, okay,
yeah.
I'm going to go get a new car and then I'm going to buy my house.
Yeah.
No,
Get the house
then car.
first, then car.
Sell the car.
Yeah.
But we want all the things.
Yeah.
That's the problem.
And we do get it. A lot of, the economy has been horrible and people have had to live off their credit cards. Like, we get that. It's been a sad, couple years, but just trying to get people pre-approved right now, it's been tough.
Yeah.
It is.
It's definitely been challenging markets going into and coming out of COVID.
Yes.
And I think everybody's just trying to get back into whatever normalcy was before COVID, even though we're dealing with all the new crazy things that are happening. So anyway, all right, student loan deferment. So make sure that if you just recently or if you put one on hold, make sure you start taking care of that before
Immediately.
just check in on it.
Check in.
Yeah, because they're not reporting until 90 days late, so you may still have some time.
When in doubt, check.
Yes.
So what's the other hurdle that we're seeing?
I'll let you touch base on this one, the forbearance.
Okay, that's where my
and the
mind
down
was. I was like,
payment.
we're talking
Yes.
about the same thing.
Yeah, I want to talk about this. Yeah.
Okay, so this is really, really big if you're getting ready to sell your house. Because another thing that people just, again, out of sight, out of mind, you forget about is during COVID, it was like, go get into forbearance, get into forbearance. They made it sound like everybody should go apply to go under a forbearance.
Right.
So if people who don't know, have never bought a home, if you had a mortgage on your property during COVID, you could essentially stop making your payments because you maybe were out of work, etc. And what they did doesn't just go away, right? Like,
No.
okay, yeah, you don't have to make your payment. The rest of us just do. No, they tacked all those payments on this, like the backside of your loan. And like, that sounds great, but what does that really mean, right? Essentially, they went and stuck a second mortgage on your property.
Yeah. Wow.
So you might have missed 6 months worth of payments. That 6 months worth of payments might have been $10,000 between the interest and everything that accrued. And it's just sitting there on the back end. It's not showing necessarily maybe on your monthly payment letter. You might not even think about it. You might even not even know what you signed.
Yes.
Most people,
man.
I can't tell you, people don't even know what they
I
signed.
just like it. I get sick feeling.
So the problem is you've now got your house for sale. You want to buy the next house, right? And you forgot about it. So next thing you know, you're at the closing table and you're getting $10,000 less back on your home. Well, maybe that was the $10,000 that you were putting as your down payment on the home you're buying. And you're under contract to sell. Like, you just made yourself homeless in a day.
Oh my gosh,
Yeah.
that's bad in so many ways.
Yeah.
I don't even know where to start.
I can't even.
The-
That's a lot. I know people did it, and I even remember seeing it on the news, like COVID, and these programs are coming out. And I think I even remember talking to Tracy one night. I'm like, people better not. That's not disappearing.
No.
Right.
It may feel good for a while, but like, I didn't pay my mortgage for
If
X,
you
Y,
ever-
Z amount of time.
If
Yeah.
you ever think they're not going to get their money,
They get
Right.
rid of it.
Yes,
you are out of your
exactly.
mind. It
That's
might
exactly
sound
right.
good and all these political things that they're
Mhm.
feeding you, but they're going to get their money.
That's exactly right.
And some people did need it. It was genuinely a great thing for the people who truly were not
Lost their
allowed to
job.
go to
Yeah.
work, or
Yeah.
lost their job.
Yeah.
But
Yeah, it
people
had
who
its
were
good-
still working
Yeah.
they didn't know what they were getting involved in. So that's one thing that we're seeing as far as like selling your home and what could be a problem.
Yep.
And then the other thing is people forget that they also had down payment assistance or closing cost programs that they utilized when they purchased their home as well. And so that's another thing where a lot of those require a payback. So same kind of situation could come into play where they forgot they've got to pay back this money on the back end because, again, you're not making monthly note payment. You're not seeing it. It's not top of mind. So best thing you can do is get your closing statement out or your closing disclosure from when you purchased your house, and it'll show that if you entered into one of those programs. And then if you have any question about whether they were on a forbearance, they need to call their lender and just make sure.
And so, like, for real estate agents, if you're going to list a house, for your seller, have them get a payoff. Make sure, ask them if they did those type of programs. Or
Yeah,
have
we
down
need to be
payment
asking-
That's some great questions to ask.
100%.
And look, most of the time we just go, okay, let me connect you with a lender that's going to work with you or whatever, and let you ask them. But that is some questions you can ask up front.
Yeah, I
Say,
think.
hey,
I think
did y'all
realtors can be
apply
more
for-
proactive. I mean, again, our goal of this is for the real estate community. I feel like this is some good little nuggets you can pick up,
For sure.
like especially like new realtors to the scene. Is like ask these questions if you're going to go to listing
100%.
because there could be no worse probably feeling that you run like a seller's net sheet,
Oh,
Yes.
and then nobody knows.
I mean, it happened to Michelle on one
Yeah.
of hers 3 days before closing. They get the sales CD, and the seller's like, "Why am I not getting this much?"
Yeah.
Oh my gosh.
So yeah,
Are you
Well,
saying for real that like if somebody signed up for this program, they didn't even put it on the regular like a statement would come in?
It's
and
might not showing on their monthly statement or payment letter.
that's not
like
a good
the-
reminder. I mean, you would
Yeah.
think that would be in there
Mhm.
reminding people, hey, at
Yeah.
some point.
And on our side of lending transaction, when they fill out their loan application, it
Yeah.
asks if do you have any more debt? Have you signed a promissory note? That's all
That's
great.
what that is.
That's all great
Yeah.
if
Yeah.
people to realize and connect those two
Yeah.
knots, right?
Yeah.
But when they
Yeah.
don't,
That's
we
all
have no
right.
way to know.
Mm-mm.
Again,
Sure.
we're relying on the information that they're giving us. So as far as
Mhm.
us knowing if someone necessarily has a second loan to pay off in order to buy their next house,
Mhm.
we're not seeing it. It doesn't show up on your credit report if you had a down payment assistance or closing
Yeah.
cost program.
Yeah.
And those forbearance things aren't
Mhm.
showing up on credit.
Yeah.
So it's happening all the way around the board where it's not like it's a hey,
Mhm.
kind of thing.
Go ahead, ask.
Go ahead.
Okay, so I saw you take deep breaths like that's when the questions come. So was there like a timeline? It's like all of that. So we know student loans got,
Mhm.
there was a timeline. The deadline ran out. People had to.
Yes.
Was there a timeline on the forbearance stuff too?
I mean, basically, it was 2020 to 2021,
21.
2022.
Yeah.
You're making me go back now. I'm having to.
So
Basically, when
people,
COVID was still affecting jobs and
Mhm.
things like that.
so people should have got like. Same thing with like the student loans where, yeah, you may be right. They don't have the EDU email anymore or whatever they run these days. And now we've got a work email or a Gmail account set up or whatever. And so they miss it.
Yeah.
But with the forbearance, like, I feel like they probably, you think they're reading junk? Oh, that's junk. Well, I don't,
Well,
I
you
mean,
signed something, right?
Yeah.
Yeah.
And you stuck it in a folder if you even have paper anymore, right? Or
Yeah.
it came through electronically. It's not going to trigger.
Yeah.
You just forget. You
Yeah.
know, that was a hard time for people too.
Get a
And they
lot
just
of
had that
email.
relief, and then they started making their payments again. And here we are,
Yeah.
4 years
Yeah,
later.
look, I mean,
and-
I guess
Yeah.
it's easy to, not be in tune with all current events and stuff. That's just a really big one to miss.
It is.
It is.
And this year, we have seen a lot of people utilize down payment assistance because they need it. And so, all these people that have bought homes this year using down payment assistance, this
Yeah.
is something that they're gonna,
Yeah.
run into when they sell their homes.
We're going to pause on that.
Mm-hmm.
What were you going to ask?
Y'all answered it.
Okay. I'm that good.
That
Yeah.
goes out of
Remember the story about the axe?
Yeah,
And
yeah.
I'm the wise man.
You're the wise
Y'all are
man.
so funny.
Down payment
Did y'all
assistance
see that
programs.
about the axe?
Yeah.
Did you? Oh boy, it's not what.
What's funny, a little side note right here. What's funny is I told Tripp on the phone, we were talking about something totally different than had nothing to do with podcast. And this story came up in my mind. I was like, oh, I remember this story. I said, when we get time, I want to tell you about the story of the young man, the old man with the axe, cutting trees down. He was like, okay, that sounds good. I got to go right now or something. He was like, tell me later. I was like, okay. So we get in the podcast. He was like, remember that story you were going to
might as well tell it now.
I was like, oh my gosh. So I told the story, and then we get to the end of it, and he's like, so what's the moral of that story? And I was like, I don't know. I was sitting there going, I don't. And I didn't let him know that, but I was like, what is the moral of the story?
Sounded like
But
I'm the wise man.
He got, but the moral of it was to Tripp.
Yeah.
He's the wise man.
Yeah.
He's
I
sharpening his
just
axe.
answered your question without you even having to ask it. That's how good I am. All right, so
But it was fun.
down. Golly.
Back on track. Let's go.
Down payment assistance programs. Whoever wants to take it, explain that, and then how. Because didn't you mention? We were talking the other day that there's is there a payback for the down payment?
Depends on the program.
Okay.
I'll
So
touch
just
base.
kinda-
I'll do Mississippi Home Corporation, and I'll let you touch base on the other one.
Okay,
Or,
yeah.
Okay.
Well, because we are signed up with different lenders.
Yeah.
So through
Let's get in the
Trust,
weeds of that a little bit because I know you're right. A lot of first time home a lot of people are using.
Yes.
Down payment assistance.
So Trustmark, we're partnered with Mississippi Home Corporation too. So we do our bond loans, I say, through Trustmark.
Mhm.
So basically how it works is there's different programs that Mississippi Home Corporation offers. So depending on income limit, first-time home buyer, they have one that's a Smart 6 where you don't have to be a first-time home buyer and you can go up to $122,000 in income. That's even higher than USDA. So we've done actually a few of those, but they basically come in and they are giving you at the moment $6,000 to go towards your down payment. It's interest-free money. There's no second payment. So it's getting you into the home and it just sits there. But if you refinance or sell, that whole entire $6,000 has to be paid back. And they have one.
Is there a time frame on that $6,000 having to be paid back?
It could be 30 years from now.
Yep.
And you still got to pay back the $6,000. Okay.
On
And
that
then
one.
they have one. So that one is the highest income limit. And then
You
they
always
have
gotta pay
one that is Easy 8. So that one is based on income limits in the county and number of people in the home. And so that will give you $8,000, but same thing. Interest free, no second payment, but once you refinance or sell, you have to pay it back.
Okay.
And then they have a trustee 10, which I have not personally done one of those yet. Julene has. That one does have a second payment. It's typically small.
It's 2% for 15 years, and you pay it back monthly.
Wait, whoa.
Okay.
Okay. Trustee 10.
Trustee 10.
Say that again.
It's $10,000
Okay,
that you pay
down
back
payment.
over 15 years.
So if you're paying attention, the 6, the 8, and it's in
Yeah.
the product term.
Yes.
Okay.
So that one's paid back over 15 years at
Okay.
2% interest per month.
So that one you don't.
Okay.
You're paying that one back immediately once you get into
Just paying
it.
it monthly.
Okay.
I mean,
You're
you
getting
sell, of course, you got to pay off the full
Trustee
balance.
10.
Sure.
You know.
Trustee
Yeah.
10.
So that's just a few of their. Every single one has a nuance, right?
Yeah.
Whether it's you have to be a first-time home buyer or not.
Mm-hmm.
You can only use it towards down payment. Some are you can use down payment and closing costs. Some have payback requirements. Some don't. There are grants out there. They're few and far between. At the end of the day, you're I always tell everyone you're paying for it
Yes.
in one way, shape, or form
Yeah.
or another.
Yes. Like
You
you,
know,
like
Either
you
on the
said
front
earlier,
end or the back
Yeah.
end.
no free money.
There is
No.
nothing
No
free
free
about
money.
any of this.
No, they are great programs and they help
better
you,
keep
but
that in mind.
it is not free money.
If
Yes.
you take if anything's taken away from this podcast,
Yes.
they're getting the money back.
Ain't no free
Yeah.
money.
Ain't no
There's
free
no
money.
If you
free
hear of
money.
a product that sounds too good to be true,
It
it
is.
usually is too good
Yeah.
to be true.
You are the consumer. You are paying for it. I mean, like I said before, it doesn't matter what it doesn't matter what you're buying, whether it's a coffee cup. Like you're
There's just-
paying all the
there's just
overhead to produce that.
There's just creative ways to pay it back. You're either
Yes.
paying
Yes.
it all up front, throughout the
Yes.
process, or at the end.
I think the biggest thing too
Yeah.
for listeners, especially like new buyers or even somebody that's done it before, if you're going to use one of these programs, just remember that you're going to have something to pay back. So save that money up, or be okay with your next transaction that you have to roll. That some of that money's going to be used. And if you're getting into a house, another big thing, pay attention to the debt that's out there. Again.
Yes.
And if you went into a forbearance or deferment, like just, houses are sitting longer. You got time to look
Right now
at
they are, for sure.
your financial situation, going in, speaking with, you guys as lenders, and then even like, we don't have to make a rush snap decision on a lot of these houses.
That's what I
these
was just going to
days.
say. Like, if you're truly in the market to buy a home and you're just wanting to get started, I don't care if you're selling and buying or just it's your first home that you're buying. Go talk to someone 6 months before you're actually
Yes.
wanting to do it. We can help you put the game plan together to get you there.
Yeah.
Or if you've got something on credit that needs to be worked on, wouldn't
Yeah.
you rather know now than when you're like ready to go? Or hey, my lease is up in 2 months. Like
Yes.
a good loan originator, I don't care if you're wholesale or retail or whatever side you want to sit on, is going to spend the time with you
Yeah.
to walk you through what you need to do to get you in the home. That's our ultimate goal, right? Like
Yeah.
is home ownership,
Yeah, that's all of our goals,
Yeah. And
We
then-
want you to win. Y'all
Yes.
want to
we
win.
want you. There's
Yeah.
benefits of owning a home. You're buying an investment. It's not something to be taken lightly.
Absolutely.
It's not something you should click a button and just go with it and
Yeah.
not understand what you're doing.
Doing.
I just it boggles my mind personally. From I would want to know what I'm getting involved in, what it looks like, what I need to do, what's going to give me the best loan terms, what can I move around here.
For sure.
I think there's so much value in that.
Yeah.
So stay off online. Go talk to somebody.
Talk
Call
to
your
a
local
talk to
mortgage
somebody.
broker.
Yeah, call your local folks. Talk to a realtor. Talk to a mortgage broker. Talk to you guys. Like, have the
That's right.
conversation.
Have the conversation. You
Google
don't,
doesn't have all the answers.
right?
Zillow does not.
I don't know anything about buying stocks, right? I pay somebody to do that. I pay somebody
Right.
to give me advice. I could blindly click a button and pray I get, a return on it. But
Maybe this business will continue and not crash.
Man, there's been a whole lot. So
Talking about the stock.
I could go. I didn't even go down the rabbit hole because I wanted to, and I'm still gonna mention it.
Yeah.
But
What's
the
up?
real estate world has kind of gotten, it's kind of gotten hit with a black eye. With COVID, like how quick things were going with COVID, and it kind of disrupted, I guess, the natural process or the professionalism, and then the whole
see, I think
NAR
we're
lawsuit.
I think we're the aftermath. Does that make any sense? Like, I think that
Yeah.
the biggest thing that people complain about is not the industry, but it's affordability within the industry, right?
Yeah.
Right
Okay.
now.
So that doesn't come from necessarily just real estate. So if real estate in general is 35% of the gross national product, right?
Mhm.
That means there's 65% over here that you're spending your money on that's influencing it. So
Yeah.
the weight of
Yeah.
everything else
Yeah.
is what's pushing down
Yeah.
on real estate.
I guess
So we're at the bottom of the hill, right?
Yeah.
And
Yeah.
all the weight
Well,
is tacked on this side of
that's
it.
a good point to look at it. I was more or less, I guess, talking about on mine and Ryan's side as realtors.
Yeah.
You know, like with like the people, you know, want to save on, so I'll just do it by myself, you know, or
Yes, we're
Gosh.
seeing that a lot
Which
right
is
now.
insane.
Oh,
because
y'all
of
do.
inflation.
Not a lot.
you know,
Yep.
the
Inflation is so high.
Inflation, like
Yeah.
what your house was worth 3 years ago is not what it's worth today, but you're going to
Mhm.
sell it on what it was worth 3 years ago. Do you know how much money you just left on the table?
Yeah.
Yep.
Like,
Yep.
insane. Sorry.
Finish your statement.
No, I just was going to say, I mean, we've got to educate our clients all the time
Mhm.
about, look, a $150,000 house before COVID is a $250,000 house now.
Right.
Yeah.
You know, it's you
Yeah.
know, to
Right.
say the least.
Mm-hmm.
And I'm
But you're
just
on the same
speaking
side,
general.
right? Don't go
Absolutely.
online and click the button.
Yeah.
And
Right.
think
Go
that that's
online.
your property
Yeah,
value
we-
because
Oh,
It's
someone's
not,
telling
yes.
you that
Yeah.
it is.
Right.
Yeah.
Well, we just
Do
talked
not
about,
listen.
you know, there's so many
Said
people
that on
today who
podcast.
they can do it themselves. That's their mentality. And they go on Zillow and they do
Yes.
a Zestimate.
Mm-hmm.
And
Not accurate.
we're finding out that, like, that's, and we knew this, but 15% of the time it's wrong
Yeah.
Right.
because they're just using an algorithm and they're gathering everything from everywhere,
Yeah.
putting it all into
Mm-hmm.
But we're a non-disclosure state.
That's
That's
right.
right.
So there's
Right.
no
That's-
public
that's true.
data
Yeah.
Right.
that
That's
is
true.
available to them to
So they're
generate
using
prices.
listing prices.
Mm-hmm.
We hammered that on our podcast. It was just me
Mm-hmm.
and Ryan, and we weren't interviewing anybody. And we were talking about, well, it was the real estate, why to use a realtor, and that was it.
Yeah.
We saw, you know, we found the percentage of those estimates and how they could be off, and then, you know, that Mississippi's a non-disclosure state. A lot of people don't know that, so they just see somebody listed at X, and they assume once it sells, like, oh, they got all that money,
Right.
and so it is very
It's deceiving.
We
Yeah.
actually, real talk right here, real life, real talk. We had probably our worst comment we've ever had.
Mm-hmm.
I mean, let's just air that out real
Yeah.
quick.
What was
From-
it?
I alluded
From
to
whether,
it earlier. You
from
didn't
whether
catch
to
it.
use a, oh, did you really?
Yeah.
To whether to use a real estate agent or
Oh
not.
my gosh.
And this guy on there, without knowing us, without anything, he puts just this terrible comment. It was on YouTube. You can go look at it. I think we responded very professionally
Yeah, we're gonna
and
respond.
lovingly, like we always are. But it was
He basically said, so the podcast segment was like, why you need a realtor, or you know, we were pointing out the positives of using a realtor. And this guy commented, or I don't know if it's a guy or girl or whoever it is,
Yeah.
but we had a comment, and I'm preparing myself that we're going to have some negativity in this, you know, and being it more in the net and social world. But
Yeah.
they basically said, I'm not going to say it, all
words
those,
they use, yeah.
basically bull crap. They just need clients. Y'all don't
Yeah.
fall for it. Clients don't
Wow.
need realtors.
Wow.
And you can absolutely do this yourself. And
Wow.
Ryan had a really good and look, here's what I will say. I'm putting this out. This is a public service announcement. We did, like he says not to. I do look at the comments because I want to engage our audience. So I don't care if you put a positive or a negative comment. I will respond to you, and either I'll ask you a question or I'll say thanks for watching.
Right.
But I'm going to let you know, like, so if you're going to blast one and think that nobody's going to see it, you're wrong.
Yeah.
I'm watching.
Yeah. Well, and there's a lot of keyboard warriors out there that'll do that.
Oh, yes.
You
they're
know, and they're
looking.
just behind
Yeah.
a camera and you
I
know.
will say for us, our clients, when they do not want to use a real estate agent, we can't negotiate for you.
Yeah.
I mean, I try to tell my
Can't draft
clients.
a contract for you. Like
No.
you're signing a legally binding
Yes.
contract. And at the end of the day, you don't know what you don't know.
No.
And you don't know anything about real estate. Just like I have no idea how to do insurance. I have no
Right.
idea how to do open heart surgery. Like
Our
Right,
license
right.
is to lending, not
right,
real estate.
right.
Yeah.
And
Right.
so, but that's usually what happens. They call us with questions on the contract.
Yep.
Okay, well, can I send you the home inspection report? And we normally
I don't know what I'm
even
looking
see
at.
those. You know, can you tell me, does this need to be fixed? And
Like,
you know, and we have to tell them, like, you and the seller really have to be close and agree. And if the house isn't appraised, is the seller going to come down? All these things that
Yes.
y'all do,
Yeah.
they don't understand. Like we can't help them with that kind of stuff. So.
You are their advocate. At the end of the day, if someone's not fighting in your corner for you to be represented, are you going to go into court without an attorney?
Right. Exactly.
Yeah.
That's a perfect point.
Man, we should have had y'all on when we did the real estate.
Mhm.
Who needs a realtor? Who needs one? What are the benefits of having a realtor? That's
I mean,
awesome.
I seriously have had
but that's
3
true.
calls lately.
Yeah.
Hey, I don't think I'm going to use a real estate agent, or
Yeah.
what's your advice
It's
on
a
this?
really good way to get in a lawsuit too.
Mhm.
Yeah.
Very.
Yeah.
Oh gosh.
So,
Mhm.
all right. So y'all been okay.
Get
So
the
we'll.
weeds.
Sorry, I said I wanted to go to a rabbit hole and I put us right in there.
It was a good one.
Yeah.
We can put ourselves in a rabbit
Yes,
hole
and we do
really
it
well,
all the
so
time.
don't worry about it.
Y'all been hitting on this since we started. So let's talk about insurance and the hurdle.
Ooh,
Even
that's a
though
big one.
even though this isn't an insurance podcast,
Yeah.
I do plan on having
Absolutely.
some of my insurance coworkers on here, so we
For
can
sure.
dive.
We are
into
going to
insurance.
do that 100%.
Mhm.
But so what are y'all seeing? And I can really help
Mhm.
y'all piggyback off of this topic with the insurance. Obviously.
Yes.
So
So mainly talking about pre-approvals earlier and how hard it's been.
yes.
So people don't realize your insurance affects your ratios.
Mhm.
And so when you have your mortgage payment, you've got your principal and interest, your homeowner's insurance, your taxes, and then you could have PMI, you could have flood, leasehold. So all those little things that make up your mortgage payment affect your ratios. We used to, I feel like, could do a
So
good
good.
job of estimating what insurance would be
Yeah.
on a home. Sales price, age of the
Yeah.
home. I feel like we could do a
So it
good
was
job.
like a game. I was like, yeah, I'm right
Yes.
on.
Well, lately that is not the case.
Can't do that anymore.
No.
Yeah, the
No.
insurance market is insane, and another plug to Tripp, but he is my insurance broker that I
Yeah.
send all my clients to. So
Insurance center.
he
Yep.
keeps me educated on that. So I kind of want you to explain more of why the insurance market is so crazy, because
Yeah, explain, Tripp.
Yeah. Why are y'all killing deals, insurance people?
yeah, but it's really hard to pre-approve somebody right now. The
Yeah.
insurance is just sky high.
It is, and
Mm-hmm.
so I think we had that conversation one time because you were putting something together, and you said I just assumed the insurance would be X, Y, Z, and I said stop doing
Mhm.
that.
Yeah.
And it's not just you. I've told other
Mhm.
people like,
Mhm.
and it was. I think again, this goes back tying into COVID. Like before COVID hit, I think there was a general rule of thumb that a certain size house, it seemed like there were certain tiers. Like, oh, this one would be about $1,200 a year, and this one would be about $1,500 a year, and this one
Yeah.
might be $1,800, and that's woo, look out.
Yeah.
COVID hit, and I've had this conversation a lot. And for the most part, we've had our reps coming in, and basically insurance carriers stopped taking like rates during COVID. So when the world stopped turning because of COVID, so did the insurance industry. Much like the forbearance, they're like, hey,
Where's this gonna go?
where's this going? People are losing jobs, whatever. And so they stopped taking rates for the most part. I'm not saying some people probably didn't see the small inflation bumps along the way. They may have, but a lot of them didn't. And then the biggest so the other big thing that was a killer to that is that when COVID hit, and then all the blockchain stuff happened, and materials. So it's hard to get, things to build houses,
rebuild.
right?
Yeah. Yep.
So material costs go way up because of all the supply and demand issues. Okay, so there you go with that.
And then we've had some crazy storms. Does that have anything
Yes,
to do with it?
the tornadoes, flooding, all
tornadoes,
that affects it.
hurricanes.
and then the weather. So
The weather.
and nobody can
Yes.
control Mother Nature.
Right.
And for whatever reason you believe, we've had a lot of impactful storms over the past few years.
Mhm.
But it seemed like everything was okay. COVID hit, and then all this stuff was building up for this just economic perfect storm for kind of disasters in the insurance real estate world. But anyway, so we're coming out of COVID. Everybody knows that price to build a house has gotten higher, or if something happens, and then we come out of COVID, and then it seems like for all of a sudden all this wacky weather starts. Whether you've got fires on the West Coast, you had weird flooding up
We
in the
did.
Northeast, and or wherever, and then you've got, obviously we always have hailstorms in the South and the Midwest, and then tornadoes
Yeah.
and hurricane, whatever you want to throw in there, mudslides, whatever. And a lot of people don't realize is that in insurance you're in risk pools. Whether you're in life insurance, commercial, property casualty. And when those risk pools start getting affected, it affects everybody in that risk pool. So size houses, locations, whatever. Insurance companies with their actuaries, they have everything nailed down to a daggone science on they. People may not remember when a storm came through. Insurance people do. They can go back and look like, oh, you said it was on this date? Like, there was no storms
That's
on
how we
this
are
date.
with interest
Oh
rates.
yeah.
And so,
Roofers keep notes of when the last storm had
Yeah.
not insurance, but the roof.
So the weather started being impactful, and then the insurance company started paying out a lot of these claims, and they go, holy crap, we're paying the premiums we were bringing in don't match the cost that we're having to put out on these claims. And I saw a report, our insurance company, the Insurance Center, Flow with Brandon.
You did your own plug.
My own plug.
He also shops.
We got a article or something passed to us from one of our reps, and it was basically the state of Mississippi when the rates were really hitting in the property and casualty world, were at rate up of 466 or 433% increase. That's a lot.
That is a lot.
Huge.
And so I tell people all the time, if you haven't experienced it, you will. These companies are still adjusting.
Yeah.
Some of them just ripped the Band-Aid off and they went straight up to where today is, and some of them are just doing little bitty increments.
Yeah.
And so we're constantly shopping. So basically it was just a perfect storm. Insurance rates went up because they weren't taking rate. The supply chain issues really became an issue with building material costs, because insurance companies have to have a reserve to pay the claim. Yes, they're in it to make money. It's a business. But a lot of people don't realize is they have to hold so much in reserves to get that A+, A-, whatever rating that makes them great, and to be able to service their customers. And I get the stigma, like a lot of people want to put small little things in these little claims so they don't have to come out of pocket.
Right.
Don't do it.
The nickel and diamond of claims, everybody's having to readjust and get, and kind of, I guess, reevaluate how insurance is looked at and what it's used for. I say it's always used for the big ticket items. That goes back to debt, and that goes back to having an emergency fund. I don't want to get Dave vicious. I do Dave every time I'm in here, but but that's
Just
what I
be wise.
believe.
Be wise
But
with
the
your
fact of it is that it costs more to build a house and to replace a roof, and to, if you have a complete devastation, to do all that, and that economy, blockchain, weather is all.
Well, I mean, right
reason.
now, even like if the roof is more than 5 years old, it seems like the
Yeah,
premiums are higher.
So there's that other aspect of it too. Insurance, much like, I guess, with government, what you see in the news, insurance deals with a lot of fraud. And a lot of fraud comes from like roofing claims and things like that, and the way some of these, I think I 100% trust our local roofers.
Absolutely.
The ones that are here in Mississippi that you see rolling down the street. These folks that come in and out of state, that's a buyer beware. Because there's nothing. You can have your local trusted guys come get on the roof and say, "Hey, you're good. If this was my house and you're not experiencing leaks, you don't need a claim." And then you get the door knocker, and they convince somebody down the street to put one on. They see it being torn off. They're like, "Well, I just had so and so," and it's a scarcity mindset type deal, or they get it's fear. But anyway, and then they can work these claims to where they can give a little kickback back, or they over adjust it and they take more money. Like, so there's fraud in the industry of insurance. So they're losing money out of that. They have to have reserves to pay all their claims. And that's another reason why, the premiums go up. And then on the back end, they have call centers, they have underwriters, they got claims folks, they got departments that run the whole thing. So that's why, in a long-winded way, that's why rates are up.
Well, and it's to the point now where we have a client.
A lot of good information.
Before they even want to submit an offer on the house, I'm telling them to get an insurance quote, especially if their debt-to-income ratios are so
Your
high.
agent needs to be. You need to solidify who you want to use before you get out there and start
and that's another thing that customers need to realize. Like, there are changes on roofs. Like, if you've got, for instance, like I have I can write through Travelers, and Travelers will not approve a roof that's typically over 10 years old. And so, and if they do, I'm not saying some don't, but if they do, it goes to actual cash value basis. So that basically means the homeowner is going to be paying more out of pocket before we allow the claim, or the claims folks allow the claim. And that's another thing that's already being adjusted. Most companies are starting to, like, you used to have these pretty little matching deductibles, all peril, wind and hail, which is your hurricane hail. Now companies are going. I mean, Progressive just went up to a 2% minimum wind and hail. That's of your coverage age dwelling. So if y'all approve and somebody gets in a house for $400,000, that wind and hail deductible is going to be 2%. If you do a claim, that's still a lot of money out of pocket.
Yeah.
It's no longer. There's very few companies, and there's some that you can have the matching deductible. But these insurance carriers are trying to make it to where the customer has a little bit more skin in the game. That helps lower your premium a little bit. But these roof ages are changing because they're that's just another thing. I'm not going to say they don't want to supplement the roofers. The bad ones, I would say yes. But it's also a way to be like, hey, you got to be more responsible for your home too. A lot of people would just wait. I mean, I've been guilty before. I'm like, man, we're getting close to needing a new roof. And then you're like, maybe we get a little hailstorm roll through here. I mean, guilty. I've done it before. And, and that's just, they're kind of stopping some of that.
Yeah.
So.
Back to the reserves, right? Like, I'm a big proponent of that. When people are trying to, like, they'll say, may have $50,000 put down in my house. And I'm like, okay, what does that leave you in your bank account?
Right.
And they're like, well, no, I'm going to put it all down.
Yes.
No.
Like,
you
yeah.
want to pay your bills. You need to know you're going to have to replace a roof in 5 years.
Yeah.
With regards to the insurance stuff, what we're seeing a lot of phone calls I've gotten this year are people that bought their home 4 or 5 years ago who now can't afford their payment.
Because the insurance has gone up.
I mean, I had one client, it was from when they bought to right now, their payment's $500 more a month because of insurance.
Yeah, insurance shortages are legit and they're real. And so I had 2 people call me last week and they're like, clients of mine. And they're like, hey, why do you think my mortgage went up? I just got this shortage in. I was like, and the first thing I said, I was like, I bet your insurance premium went up. And one of them was a real estate client. I didn't actually have their insurance, but I knew that's what it was. And then the other person was. We told them before the renewal, hey, this is going to go up a little bit. But it wasn't. Our account managers are great, and they have it marked. Like if you go over a certain percentage in a renewal, it'll flag it, and we're like, we need to reshop this.
Well, that's good.
But we also have it where if it's under, we're like, this is really, you're still really good, unless the customer sees it and they call them like, well, we can try, but there's nothing out there that we can do as a anyway. So we try to mitigate that the best we can. But the day of you guys being able to like estimate, I would say it's over.
I've learned the hard way.
And it's hard. And people are like, everyone shops for a home differently, right? Some shop by price, some shop by rate, some shop by payment, some shop by, down payment, what's the closing cost going to be. Like you can't make everyone, they're not ever going to all be even, right? So the motivation factor changes from person to person. And when the person's really sensitive on payment, or it don't work without their payment being at that amount, net insurance becomes a huge factor. And you hate to tell someone like, you're pre-qualified for $250,000, but you really can only afford $230 because of insurance.
I know.
And getting people to understand that, or taxes.
Yeah.
Property taxes are another huge thing that impact it. That can swing a transaction at a price point $20,000, $30,000, $40,000,
And you can't do anything about them taxes.
No. Whether
we can cut
homestead,
we can cut a little bit out of it. I mean, I say this very loosely and not putting any we can try to adjust some things in insurance, but we don't want to put ourselves out there to where you're underinsured or you don't have the adequate coverage. Because first of all, the banks need us to put certain amounts on there for replacement cost anyway. Then we're limited by certain limitations of how low we can go in certain areas on some of those coverages. I would say though, but I've seen it. I've been behind it, and I hate it. Like I've sent quotes out that have killed a deal. I know other insurance carriers are doing it and I've had real estate friends in the business like, oh my God, insurance killed the deal, and it's happening. It's a big thing because I quoted one last week that was $48,000 $800,
Yeah.
and it wasn't like a mansion.
Yes,
It was like a $350,000 house. It was a really nice house, but it was the location was pinging a lot of hell, and that. So another funny thing, insurance is like real estate. Location does matter.
Yes.
The counties do matter. I hate to say it, but it does. So location's is a big player for them, and then
Are you in the city? Are you in the county?
yeah,
Different things.
are you too far out in the county?
And it's just a bigger one-time ticket impact. Does that make sense? So we might all be spending probably another $400 a month at the grocery store, right? And like we feel it and we know it sucks, but we don't like feel it, right?
Yeah.
Because that's that variable thing that you think in your mind you can cut back on, right?
Yeah.
You really can't because you got to eat. But you know what I mean? It's another one of those things where your mortgage payment, that insurance is tied in your mind, you're like, that's all that this is going to be for me for an expense this month. And you get stuck in that mindset. And unfortunately, all those different things derive that to change.
Yeah.
So you can't just blame it on insurance. You can't just blame it on interest rates. You can't blame it on purchase price. It is the economy as a whole.
Yeah, it's multiple factors.
Yes.
Yeah.
Exactly.
I just think the insurance one is one that nobody was really used to.
It came out of nowhere, I think, more than anything. It just kind of all of a sudden, for a lot of people, it happened overnight.
And here's a little fun fact: the rates on vehicles are starting to go up now. So, like it was just home, and now auto is. Oh man, it's been fun. It's so fun.
So fun. It's so great. Real estate and insurance, you're getting double days.
Don't tell me that. I'm thinking about selling my truck.
I wouldn't. I'd ride that puppy till it falls in a lake
I
somewhere.
just don't need that big old truck.
I know. Clayson ain't buy it. Anyway, what else? What else in the lending world do we need to put out there to our?
Oh gosh, that was blanket statement. Lending world.
I know.
Yeah.
I know that kind of is.
There's a
I
lot.
mean, yeah. I mean, just whatever you think we. I know we definitely wanted to talk about some of these hurdles because.
Absolutely.
And look, let me just go ahead and put out this full disclosure. We're not trying to be negative.
Oh gosh,
Yes.
no.
Absolutely.
We're not trying to be
No.
negative. It is just.
It's part of the business. It's things that people need to be aware of. Just trying to help educate and help people.
That's 100% what we want to do. Is we're just trying to help people understand, and everybody's going through this.
Yes.
Everybody's been impacted. Whether it's my insurance has been impacted. I've had to shop my own stuff. So, whether you're a realtor, a lender, whatever, like we don't get any exceptions to these rules, but we also are out there trying to help our community and we want people to move. We want people
That's
to
the purpose. That's why we're doing this is we want to help the community and help people understand the different things that go into buying and selling real estate.
Yeah, but I'm not going to sit here and try to show. I mean, this is real life stuff.
It's real life.
This is stuff y'all are seeing every day. This is stuff we're seeing every day. And these rates are, everything that's impacting a deal has got.
Think about it. If an insurance premium on a house went up $200, what do you think it went up on your commercial rental property that you're living in?
Yeah.
Right.
So do you think your rent is not going to? I mean, it's all
It
it's
all
getting
is
passed
affected,
down to you no matter where you live.
I'm not going to say. I'm not going to say the what industry they were in and the name, obviously, to protect. But we had somebody call in and they were just in industry XYZ, and they were like, and their insurance went up a few $100, and this was commercial insurance, and I was like, wow, that's actually not that bad. And then the account manager in the office was like, yeah, but they're really upset about it. And other account manager was like, why don't you ask them how much they've raised their cost for what they do, because it has it's people are raising stuff so they can live and make a living for their family, and their cost of goods and whatever they're providing has gone up. But then when it happens to them, and I get it, it's a mean merry-go-round.
Yeah, it's not, you don't like it when it happens.
But if you call it, and we don't really call it out that way. I want to sometimes, but anyway, it's just everybody, like you said. It's not one thing. It's everything as a whole.
Everything. And I feel like from us being on the lending side, like when the market did kind of have that shift. Okay, here's the bottom line. We had a good eight years where interest rates were between 4% and 5%. So you grew a whole generation of first-time home buyers who think that that's normal. Yeah. That is not a normal rate. No. That was a fantastic rate during that time period.
What about 2 and 3?
And then COVID hit, and we went to where we should have never have been.
We should have never hit 2 and 3 because it.
Yeah.
I mean, you saw what it did to the economy and to the housing market. It's people were waiving home inspections, paying over asking price on homes. I mean, that's just, we don't want to be like that.
It's wild, wild west.
But if you look at history, we're the average is.
Yeah.
You know, it's just the easiest
we're
thing
getting
to
back
blame.
more normal,
Yes.
whatever normal looks
Yeah.
like.
Yeah.
We're getting back.
I told somebody before it's going to take
As
a
far as
while to
doing
smooth
deals.
back out, but
Yes.
we're getting it's.
We
It
we're-
jumps faster than it comes back down.
I remember one time I was showing a house during COVID, like the just guns blazing, and you could only get 15-minute showings at that time.
Yeah.
Like
It was crazy.
agents were capping. Normally they were like, "Hey, you got a 2-hour cap or 1 hour." It was like 15 minutes, hard stop,
Mhm.
and we're
Yeah.
like, "Okay." So, and it's look, you can in smaller homes you can make that work, breeze through. I remember showing up to this house, and there was a couple of realtors already there, and I knew it was going to be a house that wasn't going to make it 24 hours. But I was like, okay, that's not terrible, right?
Yeah.
There's a few of them
Yeah.
here. That's not terrible. We
Yeah.
might be in the running here. And
Yeah.
I knew my client had we were super tight as it was. When
Yeah.
I did my little 15-minute work and we came
Mhm.
outside, I mean, it looked like we were at a block party.
Yeah.
The cul-de-sac
People
was,
standing out there waiting to
Oh,
go in.
And
my
I
God.
bet the person that bought that house probably paid $20,000 over asking.
Oh,
to
yeah.
get that
You know
house.
what was unfortunate, and I didn't tell my buyer this, but when I shut the door, the other agent there was no bound, like it didn't care. I just handed her the key, and I said, she was like, we weren't even locking light boxes. I mean, I just handed her the key, and I said, hey, you got the keys? And she's like, yep. And my buyer was like, hey, what do you think about this house? Inside, I was like, we ain't getting this. I mean, I knew
You took too long.
we had
Sorry.
35 people in less than an hour
Yeah.
or more, and I'm like, we don't have I knew we didn't have the financial competitive to compete with what was about to happen,
Yeah.
and that was just
We don't
hard.
need to go back to
It's
that.
not a
And
good place.
you know, we still get calls every day. What are the interest rates?
Mhm.
Should I keep renting? Should I wait till they come down? Should I buy? And typically, anytime you can buy a home instead of renting, if you can afford the payment, do it.
Yeah.
Because when
Yep.
you're renting, you're throwing your money away.
Yeah.
If you're in a home, you're building equity. You later on down the road may need to do a cash out refi for some reason.
Yeah.
Or
Yeah.
there's tax benefits. Like there are so many benefits of owning a home, but we also don't want someone to be house poor
Mhm.
either.
And that's the trick
So,
these
yeah.
days.
Yeah, but as far as rates, I mean, we get this question every
So what
single
are
day.
they now that you
What
brought
are
up?
interest
Yeah,
rates?
what-
And that's such a loaded
It is.
question.
Yeah.
It's not just based on credit score. It's loan type. It's down
Mhm.
payment. It is credit score. I mean, we can't just quote a rate.
Yeah.
And if people
Yeah.
are quoting rates without all of that information,
It's not accurate.
it's not
anymore.
accurate.
Ooh, I want to touch on something.
Go.
Sorry.
Yeah.
Yeah,
Okay.
do it.
No.
Well, I want to explain discount points.
Yes.
Oh,
please.
this
Oh,
is
yes,
yeah.
a big
this is
one.
needed.
This is needed.
Do
yeah.
not
Are we
get
running out of
sold.
time?
I know.
How much time do we have?
That's the biggest
Yeah.
thing that
Joe
I can
Rogan this
stress
thing.
from all
Yeah,
of
we don't
this
care.
is do not get sold on rate alone. People do not read the fine print. They don't understand what they're signing or what they're getting
Yeah.
involved in. And so discount points are essentially work on a sliding scale. Okay. So you have par, which means like this is the best rate that you can get without it costing you a dime to get this interest rate or you receiving a lender credit towards helping you with your closing costs.
Okay.
Okay.
Mhm.
So it's sliding scale. And then there's 187 things that factor into where you fit on that sliding scale. But essentially,
April 1st.
It's just the first of
it's
all.
testing.
Yeah.
It's testing.
Yeah.
Essentially, if you want to.
Oh, you can hear that.
Ooh,
That's
yeah.
loud.
Yeah.
Go ahead. We'll
Okay.
we'll work through it.
Work all that out.
Yeah.
Essentially, if you wanted to permanently buy down your interest rate, you do that by buying discount points.
Mhm.
Yeah.
So this is always something that is optional to you,
Mhm.
right?
Mhm.
Yeah.
So it might cost you, I don't know, $500 to buy your rate down that day, 1/4%. Well, that might be worth it, right?
I just watched Twister on Netflix.
But it might cost you $10,000 for you to
Yeah.
buy down
Yeah.
that 1/4% rate.
Yeah.
And usually it is thousands of
Is
dollars.
a discount point really a discount?
And
No.
see, people get confused.
Girl, it's a
It's like
Come
your
on.
payment coupons, right?
No.
It's not a
They get
coupon.
No.
confused. Like you're
Don't call it a
this is your
discount
money.
point.
No,
You know.
they do need to.
They need
reword
to-
it.
I need
I'll
to.
give the biggest example of refinance that I just had someone call me about, and they were like, Julene, and it was not even 1/4 of a difference in interest rate, okay? But they were being charged $2,900 in discount points to be 1/4 of a rate lower than what I was giving this veteran.
Mm.
The payment difference
I was about to say.
Oh,
what's
here-
the
yes.
payment
was
difference?
$9.03
A month.
a month.
Oh,
$2,900.
so there you go.
How
There you
many
go.
years he'd have to be under that note?
Mhm.
He ain't living in that house that long.
No.
No.
He's not going to be under that note that long for him to ever recoup what he spent to
Yeah.
buy down his interest
Yeah.
rate to save $9 a month. So understand what discount points are. If someone's leading with the rate conversation instead of understanding what
Yeah.
par is or what even is first, I'll present them to them, but we talk about it, right? How long are you going to live in this house? Is it worth it? Do we think the market's going to drop within a year or two and you could just refinance for less? All those different things kind of come into play.
Yeah.
But it breaks my heart watching people getting
Yes.
sold
Yeah.
on interest rate and throwing thousands of dollars
Yeah.
out the window to save.
And if
Yeah.
you're
Couple bucks a month.
shopping between different lenders, ask for a loan estimate or a
Yeah.
fees worksheet. You want to see all their fees. You want to see, it will show the discount points.
Yeah.
There's so many people that just call and, usually when they call us, I had a guy say, I'm getting quoted 6.25 on conventional, not costing me anything.
Yeah. Okay. Yeah.
I'm going to need a fees worksheet on
How
that.
Yeah.
much that it is.
That's-
And mortgage insurance. Like
that's-
if you're going on a
yeah.
conventional loan, like different companies charge different mortgage insurance
Yeah.
premiums. That could swing your payment $50 a month. Like you're
Yeah.
it's so much more
Yeah.
than just your interest rate. And that's why I said just don't click the button.
My thoughts towards that, if you're going to spend the $2,900 to get the discount point,
Mhm.
I would either say save that money for your emergency fund when you get in the house,
100%.
or
Yeah.
put it into your down payment.
Supplement
Just
your
put
payment,
it-
right? I'd rather
yeah,
you
put
have
it-
that money sitting in the bank to
Just
make your
put it in
mortgage
there,
payment
yeah.
than
Yes.
buy down a
Because
rate.
in my
Mhm.
opinion, it's just it's an uploaded, it's a front end fee.
Mhm.
You still paid the interest, you just paid it
Yeah.
all up front.
At $9 a month.
At
I mean,
$9.
You,
Yeah.
you could not go to Starbucks one day and save $9 a month.
Yeah.
Yeah.
Yeah. That was that's a good
Yeah.
one.
It's something that I just and especially on the internet, right? Like rates
Yeah.
are being advertised in like microscopic print at the bottom. It
Yes.
tells you that this was so and such amount of discount points, but it doesn't
Yeah.
break that in. It shows a percentage, right?
Yeah.
It doesn't
Yep.
equate that to a dollar amount based on your loan
Yeah.
amount.
Yep.
So you really, really, really
Yeah.
need to know that, and that's
Yeah.
when your agent might say like make sure you're shopping your closing costs. But people don't understand what that means.
Yeah.
Right.
That's a hard one too. Like I think
Closing costs.
yeah, and that's
Mhm.
where you go back to your fee sheet, right? And then
Mhm.
knowing your title attorney you're going to use, because
Mhm.
like we can't, and I have I can gauge a little bit. This kind of goes back to the insurance stuff, I guess, that y'all used to like estimate insurance.
Yeah.
Like a certain deal, I typically try to see what 2%, maybe 3% that deal look, and that gives me a roundabout number. But then I always try to check like, is it going to be this much? But there's
Right.
no way for a realtor to really know that. I try
Uh-huh.
not to get in that lane too much.
Yeah.
But that's another conversation. Great
Mhm.
that y'all talk about fee sheets. And,
Well, and taxes and insurance, that's part of your closing costs.
Yeah.
Your insurance, your taxes, your escrows, your prepaid. So
yep.
this house may be different from this house as far as closing costs. So.
Yeah.
Know what
That's
you're
a good
getting.
point.
Yep.
The
Yeah, for
biggest
sure.
thing I can say. Know what
Yeah.
you're getting.
So do you think we have accent, or do you have accent?
I think mine goes in and out depending on who and when I'm talking to, and if I'm talking too fast or
Well, I
whatever.
I say that jokingly because I didn't know you were from New York.
Oh, if I go
Yeah.
to New York, everyone's like, "Oh
Yeah.
my
You've
gosh!"
been in the South.
Right? If
Yeah.
I'm talking down here, then I get the whole like,
Yeah.
Yeah.
I
So
get the same thing going back to Florida. They say Yankees, Florida is a Yankees, but when I moved here, everyone said, "Where are you from?" And
Yeah.
then now I've been here. When I go home, they're like, "Oh, that country accent."
Yeah.
I used to mess with them one day and be like, "Where are you from?" And I'm like, "Cluckstadt." I
Yeah.
knew exactly what they were asking
Yeah.
me. I was like,
Right.
"Cluckstadt."
Yeah. Yeah.
I used to tell people all the time,
Keep them wondering.
obviously when I go out travel outside the state, I get it a couple of times. I know I have a Mississippi drawl.
Yeah.
I also got added on that on one of our.
Oh yeah. I'm glad you brought it up.
Yeah.
So we had somebody on there one time talking about
one of our
Tripp's-
shorts.
Yeah, talking about Tripp's accent or
Right.
something.
Thank God they had subtitles below it.
I was like, what?
So I responded. I was like, "Hey man, appreciate you watching the channel." I said it's just kind of like the Morgan Wallen song. It's the way I talk. But I'll go. I say that because, and I'm picking with you.
Oh, you're good.
But I go out of state and people will say something to me, and I'm like, "What are you talking about my accent? You're the one that talks weird. Like it's
Yeah.
not me."
Right, you're the one with the accent.
So anyway, that's good to know. I didn't know that about you.
Yeah.
I tell them when they're moving here, I'm like, the first three things anyone's going to ask you, where are you from? Because
Yeah.
they're going to hear it in your voice.
Yeah.
Where do you go to church?
Yeah.
Who do you root for?
Yeah.
So if
Yeah.
you're moving to Mississippi, you better figure that out before you get here.
That's true. Or you can
That
be,
is true.
if you follow April on all her socials, she doesn't care. She's still going for Florida State
She
Seminoles.
is.
I love my Knowles. I'm sorry. I'm a true fan.
That's
That's
true.
awesome.
That's all right. That's the way to be, though.
Yeah.
I guess what's some takeaways from this, man? Unless y'all got anything you want to throw back in here. I mean, we're
Let's-
kind of
We
getting.
covered a lot.
Let's ask
We
this
could talk
question.
all day.
We can start with April,
Mhm.
since April 1st. What's something that people don't know about
Oh,
you?
I put her on the
What's
spot too
something
late for this.
that people can like? Do you have like you ride a motorcycle or something, or
I mean,
what's something that?
oh. I am fascinated with crime shows.
Oh my God,
Oh.
you're one of those
I
girls.
love crime podcasts, the ID
And
channel,
documentaries and history.
and
She's not
documentaries
totally a serial killer.
and history. Like I
Yeah.
even have my daughter, she's 13. That's our thing now. Like we will watch documentaries, anything based on true story. I'm obsessed with things like that. Love to travel. So if I watch a documentary and it's based on
Yeah.
this, I want to go to that place and see it.
Yeah.
Let's go to where the serial killers were.
Yeah, yeah,
I will.
yeah.
I will. Yeah. So, yeah, history, ID, if mortgage business ever.
Oh, that's your next thing.
I'm
We're
gonna
gonna
go to
be-
forensics.
I have two things about that. One, Tracy loves that stuff too, and I remember one time I almost couldn't even go to sleep. I was
love
like
it, too.
listening.
I watch all these.
I was listening to all this stuff in the background. I'm hearing, and I told her, I said, there's a common denominator in most of these. It's always the wife killing the husband, and I was like,
I don't know
I-
about that.
well,
The
no,
one she watches, apparently.
yeah, that's what I was at.
Yeah.
So I was like, hey, I don't really need to be thrown in a tub of acid or whatever. I was like, we can just whatever.
You're gonna take
If it
me out, here's
if it
the way I
ever
want
gets to
you to
that
do it.
point that bad, so
Yeah.
I always joke about that because I
Mhm.
feel like she was on a real big kick about the
Yeah.
serial killing. I'm like, are you trying to? What was going on here? So
I just watched the
Um,
newest one. It was a movie actually on the Boston Strangler, and it was fascinating.
I hadn't watched that. Was it on Netflix or Hulu, or
I
what
think
did
it
you
was
watch
on
on?
Netflix, and then my daughter and I just
The
watched
Boston Strangler.
Yeah, the Boston Strangler.
Write that
Pretty
down.
good.
Producer.
well, here's the other thing about that. The second part I was gonna say is like, I watched that. And I'm like, I don't trust going out in the world.
Well,
you know what I
okay,
mean?
so it
Ignorance
makes
is
me
bliss.
more aware.
Be a
It
police
makes me more
officer.
aware of the
Be a police
craziness.
officer for 10 years.
I need to be in my happy little bubble. I
I'm
don't
in
need
the
to work.
ignorance.
Yeah.
I'm happy.
Yeah.
I want to be
Yeah.
aware.
Yeah.
No.
Look,
Mhm.
I'll say this as a law enforcement, been in law enforcement for 10 years of my life. There are so many things that go on out there that you never hear about.
I don't
I
want to
know,
hear
You
that's-
that.
never
I
see.
know.
I don't need to
It's
see it.
scary.
I don't want to see
And-
it.
It's scary.
Which is, I'm glad they do that because the world probably be a lot more chaotic than it already is.
Yeah.
But there is so much that goes on out there that doesn't get airtime.
Hmm.
That's insane. And it when I got into law enforcement, not trying to get into this too long, I learned so much about our community that I didn't want to know.
Yeah.
But I
Yeah.
realized, like, okay, this world, like,
It's crazy.
is crazy.
Yeah.
It is crazy.
That's
world.
why we back the blue.
That
Yep.
you need law enforcement.
There ain't no
Oh,
doubt.
for
For
sure.
sure.
Yeah.
All right, so you're
All right.
you're a internal plotter of serial killings type.
So you know all these really cool all these really unique
Things to
ways to
be-
get rid of a body.
Oh my
I'm not gonna
gosh.
say
Yeah.
I'm just more aware of my surroundings.
There you go. That's a perfect way to end that one. All right, Julene,
All right.
same. On the spot.
What about
Just
you?
got-
What
about-
she's
We
from
gave
New
you a
York.
minute to think about
She's
this.
from
Look, and I
York.
was just listening, wasn't even paying attention. I would say probably I love being outside. Like
Yeah.
I'm an
Yeah.
outdoor kind of person, and not hunting, not that kind of outdoors. But
Yeah.
we love overlanding and camping and kind of just living on the side of a cliff kind of thing.
You
Wanna
need
put
to go
in
in
Whoa,
more
whoa, whoa, whoa,
detail.
whoa.
No, you've got to go in more detail.
Wait,
about
did you
what
just
y'all
say
Yeah.
Yes.
hanging out? Wait, you said hanging on the side of a cliff?
Yes.
Okay.
You go in more detail because it's really cool.
Yeah,
That's like
yeah.
camping on
Let's
the
hear
side of a
about
cliff.
this.
I've
Let's hear about
seen.
So
Is
like
that what you do?
we throw a tent on the top of my 4Runner, and we are on a dirt trail in the middle of nowhere. We
Okay.
just got back from
That's cool.
Colorado, 14,000 feet up, and it's just nothing but straight down.
You're camping on
cool.
the side of the cliff?
You could if you want to, but
Or
we
you just-
usually get down. We do
Okay.
usually back down in the valley.
They
And,
ride
but
all
we did. We
down.
one night we slept at almost 11,000 feet up.
Okay.
Yeah, because
That's cool.
So chilly up there.
For sure.
July.
So y'all like to hike up there?
I
Camp,
love to
and
hike
Yeah.
on foot. We love to be in the truck doing it. All that sort of
that's
good
cool.
stuff.
Yeah.
So,
That's awesome.
That's
Where
awesome.
was the
Go
trip you
out.
took out west?
well, that's when I went to Colorado. We go to Arkansas a couple times
The
a
one
year.
before that, it was way out there. It took you like 2 days to get all the way out there.
It was Colorado.
That was?
Mm-hmm. We've done
Did you go
Moab.
to Moab?
Moab's
Yeah,
fantastic.
Moab, that's what I was thinking.
So I love being outside.
That's
That's probably
good.
my biggest
Yeah.
free
We
time.
went to
Have something
Vegas
in
for a
there.
mortgage conference, and she's got me out hiking up
To
2
the edge of the
miles
cliff.
up. Where was that? The Red Rock. Red Rock. Yeah, we've
Whatever
been
it
in
is,
Vegas for 2
Yeah.
days. She's like,
I
we're gonna
like
go hiking 2
Yeah.
miles up a mountain.
No big deal.
Yeah. I just got up 2 hours ago.
Right, exactly.
Pretty
Well
much.
dehydrated.
Oh my gosh. Yeah, and it's hot out there and dry out there as
Yes.
it is anyway.
Yeah,
I
it was
thought you
fun.
meant that I've seen these people who like literally like, they'll
Oh, they're in a hammock, like pinned to
Yeah,
the side of the
yes.
mountain. Yeah,
Yeah.
no, I'm
Okay.
not that brave.
I was
Yeah.
gonna say we gotta have a
I was
you definitely
imagining
need life
that, too.
insurance.
Yeah. Have you talked to your
Yeah.
insurance agent?
No kidding. Well, anyway.
Definitely not that. That's probably my hardest thing living here is there's nowhere to hike, there's nowhere to be
Yeah.
outside,
Yeah.
there's nowhere to really do any of that stuff. So that's probably the one thing I miss the most when we
Yeah.
have to go travel to do it. But I love to travel, so that's a big side of me.
What gives you a
Yeah.
reason to travel?
Yeah.
Yeah. Oh,
Yeah,
absolutely.
for sure.
And to be on a 2-lane road instead of a highway going, 90 to nothing, it's just
Yeah.
a
Yeah.
way to kind of slow down and
Absolutely.
breathe. And I guess the other big part of me is just I love being in the community and doing things for my community and helping my community grow.
You need to give a
That's-
plug to your first responder. She has a very wonderful passion for first responders, and she pours her heart and soul
Well, that's amazing.
Oh,
into
cool.
helping them. She does a parade every year, which is coming up.
Yes.
Yeah.
What's the
Yeah,
parade?
Yeah.
It's the Madison County Parade of Honor.
Yeah.
Okay.
So every first responder that services Madison County parades down Reunion Parkway.
That's
So we do it
awesome.
during
Okay.
Law Enforcement Appreciation Week every year.
When's the
Yeah.
date?
I
May
still have
15th.
family in law enforcement, so
May
that's
15th.
great.
Y'all come on out.
It's a great parade.
May
It's a great
15th parade
Mhm.
for first responders in Madison County.
County.
There you go.
Sorry, it's where I live. That's where my roots are in that county. So
Yeah.
it's kind of where I host it there. And then we do a 9/11 Run to Remember. So it's a 5K right around September 11th. And then every time around Veterans Day, once a year, we do it like a Community Appreciation Day.
That's
Okay.
fantastic.
So
Yeah, that's awesome.
That's
Just
all great
little
stuff.
things to do to get the
You
community.
can
more
give
involved.
Absolutely.
us some links to that or whatever. We'll post.
Yeah.
Post.
Yeah.
We'll post them in the notes.
We'll post it on there.
We'll post them in there. That's good stuff. Well, look.
Yeah.
Yeah.
I mean, I think this was amazing.
Yep.
We
I
We're
appreciate
so
it.
honored. that
Thank y'all so
I'm
much.
glad-
We love watching your podcast. So
Well,
it's an
thank
honor
you.
to be
Thank
here.
you.
We're having fun with it. We're trying to build that community, and we absolutely loved having you guys on. So thank you for spending time with
Do y'all
us
want
today.
to?
Yeah, plug
How
where
can
Mississippi
people get a hold
Lending.
of you
How
if
people
they need
find y'all?
Need a lender?
Social media.
A
Yeah.
broker?
So you can go to MS Lending LLC. We have a Facebook page. We have a website.
We're right in Madison. If you
Yeah.
know where the Red Caboose is, just turn right
That's
there
where
on
our office
Montgomery
is.
Street. You can come pop by, see us any single time. Cell phones, that's the way to get real of us. You
Yeah.
know, mine's 601-862-0542.
Yeah.
601-383-2722.
I love it.
I love
Well,
it.
thank y'all again so
Thank
much
you.
for being here, and
Appreciate it.
I'll take us out.
Take us out, man.
Y'all, thank you so much for watching this episode. I hope you learned so much, so many new things about lending and all the different aspects of it. And y'all have a great week. We'll see you next Tuesday. God bless.